Let me turn my camera on.
Yep, I see it. Hello, everyone. Welcome to another episode of the Wall Street Rundown. Man, this day got me messed up. I always mess up the whole name. God dang, man. I'm your co-host Billy. I got my co-host with me, Wale. What's up, bro? How you feeling?
I'm feeling good, but I'm a little confused.
Yeah, man. We are in the same boat, bro. So today's April 30th, the last day of April, man. And boy, did we get some. I don't know if what to call it, late April Fool's Day. I have no idea. And as I always say, man, if you're sleeping under a rock, here's what happened today. We started the day out in the negative. When I say negative, I'm talking about deep in the negative. Like most of the indexes are down like 2% or more. And we closed the day in green. Like that is that is nuts. You know what I mean? That's a complete, it's not 360. People keep saying 360, but it's a complete 180 reversal back to the other side. And it is crazy. And if you go look at the stock market right now, the futures market are up big. And we'll talk a little bit about why the earnings and all that stuff is going through. But overall, man, S&P closed at 554, up 9% from negative more than 2%. Dow Jones also closed up. The Nasdaq closed up. I mean, I am kind of surprised because the GDP came in and the report wasn't as nice. And I was kind of shocked that we had a negative reaction in the morning, but after that, it seemed like everything just went up. You know what I mean? Like, which is surprising. So the GDP report showing the U.S. economy is actually, slowing down. There's a concerns about potential recession and all this stuff. Is a recession here? I don't know. Inflation data, also the personal consumption expenditure, which is PCE, also indicate that inflation slowed in March, which may influence future Federal Reserve decisions. So market sentiments, I mean, what you see in the market today does not reflect what we see in the hard numbers. Wale, man, I want you to break down these things for us because we're all confused as in what's happening.
So remember back in March, we were talking about the Atlanta Fed report,
Yep.
where the Atlanta Fed was expecting a negative GDP print for first quarter of 2025. Now, their estimate was more negative than the report that we got today.
Yep.
But regardless, the GDP number came in negative. So what is GDP? So GDP stands for gross domestic production. Basically, it is a accumulation of all the production that is done within the US borders. So basically, you have consumer spending, you have government spending, you've got fixed investments, and then you have imports versus exports. So the report showed that there were more imports than exports. And when you have more imports than exports, that negatively affects GDP. And the reason for
Yep.
that is exports mean you're spending money, imports mean you're collecting money. So when you're spending more than you're collecting, therefore you get a negative number on the GDP if your imports are more than your exports. So that's what we had. People were saying that the reason why imports were higher than exports is because everybody in the first quarter was front running all of the stuff that they buy overseas because of the tariffs. So they wanted to start to front load that. So, it was people were saying that's expected because if you
Yep.
know something's going to be more expensive down the road and you know that, of course you're going to want to bring as much as you can in when values are a little bit lower. So
Yep.
people saw that. But regardless of all of that, people were still trying to hang their hat on consumer spending is still strong, and the consumer is still spending. Main reason why we say the consumer is still spending is we haven't really seen an increase in unemployment. Now we did see the weekly unemployment number go up a little bit last week.
Yep.
We're expecting another number tomorrow, so we'll see what that number is, and then we'll also see what the new unemployment number will be for March on Friday.
Yep.
So how should I put it? A lot of people are saying if you stiff through the actual report and you look past the headline number of what GDP was, you'll find that things aren't so bad. And that's
Mm.
why the market went up. So do I kind of believe that? I kind of see some truth in that.
Mm-hmm.
But to me, it's still a red flag. But my opinion doesn't matter. because what did we see today? After we were down 2%, the buy the dip happened like crazy. We saw the same thing on Monday
Yep.
because the market opened up higher, right?
And then we sell
Sold
off.
off and then
Mm,
came right back.
yep. Yep.
So there's still a lot of positive sentiment in the markets right now. Um, I think it might be a little bit exaggerated in my opinion, but what do I know? So I'm surprised that the market closed the way it closed today. I'm very surprised.
I mean, I seen some news that came out, right? So, but it was like it wasn't like anything crazy. For example, the talk with Xi from China is still kind of maybe will be happening, right? So
Hmm.
Trump is saying that he still want to talk to China and all this stuff. So I mean, but still, like all the tariff talks, all of this stuff is it's good, but it's like should it be moving the market this much at this stage? I could see in the beginning when we have all this issue and all the tariff and all that stuff, but should that still be moving the market this much at this late stage? You know what I mean? I
Hmm.
mean, kind of technically, we haven't seen a full cycle of tariff yet. We haven't seen those numbers
No,
yet.
nope.
So those things are kind of still, in limbo because we have no idea what the impact is on the stock market, right?
And we probably won't have those numbers until April.
Yeah, yeah. But I'm starting to see also some backpedaling, right? So Trump came out today and said, "Hey, we are in a Biden economy. This is what we're going through right now is a result of Biden economy." But I was like, "Wait a minute, dude! Like, take ownership of it. You know what I mean? Like, it doesn't matter if it was Biden 20, like last year or a couple of years ago. It's like this is you are the president now, so you have to deal with what's given to you, right? So, I mean, I don't know, man. I guess I don't see why the news are still moving the market this much. And I guess
Hmm.
long term, and we always talked about this, the stock market will be fine. But short term, we're going to keep seeing this crazy gyration of the market.
I think as long as the VIX is staying above 20, I would say we can expect these types of moves on
Yeah.
an intraday basis, as long as the VIX stays elevated. Another thing that came out today that people didn't talk about as much is that ADP private sector job number came in at
Mm,
like 62,000.
yep.
It was a big miss because I think the number people were expecting was like 120,000. So you're talking about half the estimate in the private sector.
Mm,
That's a big miss.
yeah.
That's a big
Yeah.
miss. Now the question is, will that eventually translate to higher unemployment claims tomorrow? And will that
Mm,
translate into higher unemployment number on Friday?
mm,
So the only caveat to that is, as we've seen, if you've been paying attention, sometimes the unemployment number matters, sometimes the
sometimes
unemployment
they don't.
number doesn't. Because the weekly unemployment numbers, I remember one week it made a really big move on the market.
Right.
And then
That was
subsequent
back in
weeks,
August. Yeah.
yeah, it didn't do anything.
Right.
I think Friday's number is going to be a little bit more important. I think we're at 4.2 unemployment rate. So if we start ticking up to 4.3, 4.4, 4.5, that to me would be a red flag. So we'll have to wait and see. The only thing that sucks is that numbers like PCE, numbers like unemployment, numbers like GDP, they're always looking backwards in time.
Right.
So you're looking at lagging indicators. You're looking at the previous month. Now, the GDP number, some people are saying that when it gets revised, it might change because this is just the first report. There's going to be two more revisions. And I
Mhm.
think, if I'm not mistaken, the second revision will be May 29th. So we'll see if the number changes on that day. So, you know, we'll have to wait and see.
Yeah. Yeah.
But I'm not as I'm not as sold on the optimism that we saw in the markets, but again, what do I
Yeah.
know? If you look at what happened today, everybody's saying that report don't matter.
That basically what they said. The report doesn't matter, but it's like at the same time, again, going back to the ADP numbers. I mean, 62,000. That's down from 147,000 in March. You know what I mean? It's so
That's a
basically
big drop.
that's a big drop. So can you imagine like adding 50% or more less job than you did the previous month? Like
That's a
that's not
that's a
good.
that's a big drop. So the question, and this is the private sector.
Mm-hmm.
So the question remains is again, does it start to show up in the unemployment numbers or
Right.
not? Because again, remember, if people lose their jobs and they find a job before they start claiming unemployment, probably not going to show up in the data.
Yep.
But if people are losing their jobs and they're not being employed and that gets longer and longer and longer, it's probably going to show up in the data.
Yep.
So what I'm hearing from a lot of people is, hey, as long as the consumer spending, as long as consumers have jobs, who really cares? Because if you look at GDP, most of GDP is consumer spending.
Yep.
So as long as the consumer is spending, then we have nothing to really worry about. So I'm still somewhat cautious. Because again, here's another thing.
Mhm.
Let's just say everybody front loads GDP, they front load their imports for Q1, right? And because of tariffs, they don't want to spend no money in Q2.
Q2, yes.
So are we just delaying the inevitable?
Let's talk
That's
about that.
that's another that's another question. So
That's a legitimate concern. Like,
so so,
yeah.
so let so let's give an example. Let's say I'm a business, right? I import a lot of my product overseas. I imported a ton of product in Q1. So when Q2 rolls around, I'm just like, I pretty much got everything I need
I don't need to
because
order
I don't want
anymore.
I don't want to spend anymore because of tariffs because it's going to be more expensive for me to
Yep.
sell.
Yep.
So let's say Q2, I don't spend any money. That can bring Q2 GDP down. But it's going to take a while before we get to even look at those numbers because
Right.
Q2 GDP probably won't be calculated until July.
Mm-hmm. Mm-hmm.
So I don't know. There's a lot of moving parts. But the price action and what the market is showing is that people are still fairly optimistic. And, as long as people are optimistic, and who am I to sit here and argue
Right.
about what to
Right.
expect? So,
Right. I mean, and then we see that, a lot of companies are committing to building and building more in in the US. So
hmm
I mean, I think what people are mistaken is it's going to take a while for somebody like Apple to move all their production over from whatever they're going. So committing to invest like $500 billion in the US, what exactly does that mean? Does that mean building more factories, building more? Um, I don't know what that means.
hmm
When they commit to investing 500 billion in the US, and also over what period of time. You know what
hmm
I mean? Because I can say we are committed to investing $500 billion, but that might take $10 billion a year. Then you end up with like 10, 20 years, you're spending $10 billion a year to invest back in the country. So it's like that's still very ambiguous to me. It's like, yes, we have all these companies committing to spending money, but over what period of time is it going to happen, right?
Yeah.
And when do you actually see the benefit of them actually coming back?
hmm
You know?
And I
So,
think TSM is continuing to build their
yep,
plants out in Arizona. I think IBM came out and said they're gonna spend more money in the US. I think Nvidia said the same thing as well not
yep,
too long ago.
yep.
So, you know, well, this is my question though. As you commit to spending more money in the US, right? Does that eventually translate to a higher cost to your customers?
Mm-hmm.
That's the question. That's the big question. And whether your customers are willing to eat that cost.
Right.
That's to me, that's the big question. Does bringing back jobs to the United States help the economy? Oh, most definitely. I think that's a good thing for the labor market. But the question I always have is what does that translate at the end product of the consumer?
Right.
Because that's one of the biggest reasons people say you can't build iPhones in the United States is because the price would jump to a point where people aren't going to buy it at that price point. Like we talked
Right.
about a couple of weeks ago, if consumers say we're not going to pay X price, you have to lower your price.
You have to lower your price. Yep.
And if it costs you more money to make that product and your consumers don't absorb that price, your margins go down.
Yep. Yep.
So we'll have to see what it translates to. I can't call it right now, but we'll just have to wait and see. But um, yeah, a lot of moving parts. And even with the moving parts we all have, as you mentioned, we do not know the type of effect tariffs have had overall on the economy because we're not going to get that data until probably next month.
Yep, yep.
So
The other thing I want to talk about is Tesla. Tesla actually recovered really well today. They started out at down all the way to 270 something, and then they closed at 282, 283, somewhere around there. Um, your thoughts on where the possibly trajectory for Tesla is? Because it seems like kind of what we talked about last week, people are making more bet on Elon rather than the actual company. So what are your thoughts on where does it go from here? Because I also saw some insider trading that's happening, right? So some people are buying it, but I also see like some, I guess, some board chair actually start selling some stocks also. So I don't know what does that exactly mean in terms of Tesla. And we also saw that Trump is actually doing some more tariff um easing on automotive. Like, does that mean that's going to help Tesla out too? I don't know what that means
I
there.
think that's the big I think that's the big thing because if I'm not mistaken, most of Tesla's vehicles that are sold in the US are also built in the US.
Mm-hmm.
So from, and I'll be honest with you, all of this auto tariff stuff is confusing because it's
Mm.
like there's tariffs on some things, but tariffs on not some things. But if you
Yep.
do this here and you do some of this here, like I don't understand it completely. But from what I understand, most of Tesla's production of cars that they sell in the United States are produced and built in the United States.
Yep.
So they may have qualified for some of those exemptions that Trump talked about yesterday, where he started to make some exceptions. As far as the stock is concerned, if we just look at it from a technical basis, what it's trying to do, it's trying to break that 200 EMA SMA area right now.
Mm-hmm.
And you can kind of see that it's got a bullish fair value gap dip, and you've got a bullish hammer on the daily. So if it starts to break above 291, to me, I don't see any resistance until it possibly gets into the 300s,
Yep.
possibly.
Yep. Yep.
So, and as long as the momentum in the market is bullish, I don't see a reason why it doesn't move higher. Because again, on the earnings report that it got this past quarter, that stock should have been down like 10 to 15%.
Yeah. Yeah.
But
Absolutely.
that is not what we saw. So, um, I would if it breaks this 200 EMA SMA area between 287 291 and it can close above that, to me I think it starts trading to the 300s. So, and
Man,
if I'm not mistaken,
yeah, not
Tesla
far.
te yeah, Tesla's green on the month now, green on the quarter, and green and it's just red on the week so far. So, yeah, we'll see. I think
Yep.
that this one starts to push higher unless we get some headline news that kind of just kills everything.
I mean,
You gotta always throw that caveat in there because it could happen.
and I'm counting on that too. One of the things that I was talking to one of my friends that I was like, look, if you are in the market today, if you're not trading based on news, you might be, putting yourself in a bind. You know what I mean? Like, because on a regular day, the stock market doesn't really move much. I mean, we saw some low volume over the past couple of days. I mean, there was some movement here and there, but it wasn't a lot of movement. But then today, the news came out, and if you would have got a put from yesterday, you would have printed. You would have made some money. And if you would have got out and got you a call, you would have made some money. But at the end of the day, it seemed like we are in, and again, we said this time and time again, we are in a news moving market where
Yep.
the news drops, there's some type of catalyst or some type of news that just drops, and the market just reverses courses or go deeper into whatever is going. So I think paying attention to the news is going to help you as a day-to-day trader. But as a long-term investor, we have a lot of great stocks that's just sitting there way below its 200 EMA. I mean, I'm looking at Nvidia. I'm looking at like so many different companies. It's like, if you buy and just chill, I think you'll be fine. But
Another thing I
if
want to say too is yesterday's price action. Howard Lutnick, the Commerce Secretary, was the one that pumped the market. So he was supposed to jump on at 11 Pacific,
Yeah.
but he jumped on. CNBC started showing the interview 15 minutes early.
Whoa.
And the minute he started talking, market moved to session highs.
Yep. Again, even those intraday news that comes out, like you still got to pay attention to those things. You know what I mean? Like you still got to make sure, like you you have the whole schedule, have the president's schedule. Who's in the president cabinet is going to talk, especially if they're talking about the economy. You gotta have those things in hand. Otherwise, you can be in a trade and thinking it's going one way, and the next thing you know is going the other way. So paying attention to
and
those things.
and next week, the big item will be May 7th when Jerome Powell talks about the data that came out from this week. So he's going to have to
Yep.
address the negative GDP number,
Yep.
get what he says about that. He's going to get the unemployment number this Friday, right?
Mm-hmm.
He's
Mm-hmm.
going to have to talk about that, and probably going to talk about if they're seeing any effects on tariffs in the data.
The data.
So
Yep.
we'll have to see what happens. Now, my assumption is that they're not going to do anything with rates. They're probably just going to hold rates where they
Yeah,
are.
it's gonna be
Because
no
again,
change.
how can you give a prediction or guidance of what you need to do if there's so much uncertainty?
Right.
Because a lot of companies are still, some are giving guidance because they're saying, hey, tariffs doesn't really affect our business. Other companies are saying, we don't know. We're not going to give guidance.
Right.
And other companies are giving bad guidance. I think Supermicro gave bad guidance.
And they dropped.
And you saw that stock was down like what, 12% today?
Yep. It dropped
Nvidia
pretty
was
much.
also down on the news, but Nvidia eventually recovered, and now Nvidia is up after hours because of Microsoft
Meta,
and
and
Meta.
Microsoft. Yep. Yep. Well, let's transition to that actually. Major tech earnings revenue today. Microsoft reported their revenue is up 13% year over year. They're up to like $70.1 billion. Their net income is also up 18% year over year, $25.8 billion. Their earning per share is $3.46. So some of these are strong performance in the cloud service like Azure, revenue growing 22%. The company also emphasized its investment on AI infrastructure and applications. Meta is actually up also 16% year over year at $42.31 billion. Their net income is also up 35% year over year. That's crazy. At $16.64 billion. Their earning per share is $6.43. They also talk about investment in AI, including AI glasses and Meta AI, which now has nearly $1 billion monthly active users. Yo, they have the whole planet. Threads, Meta's Twitter competitor surpassed 350 million users, active users. I did not think Thread was getting that big. That's crazy. But yeah, like those two beat, and then you see that the market just went up. If you look at QQQ after hours, if you look at SPY after hours, if you look at futures right now, those probably was pumping the market up right now. The revenue that came out from this tech.
So basically, if we're not mistaken, it seems like the big companies are still fairly doing well.
Yep.
And Microsoft, very good report. And if you look at the bulk of their revenue, so let me look at this picture real quick, if I'm not mistaken. Okay. The bulk of their revenue is from cloud and software.
Mm-hmm.
So let's think about that. Cloud and software.
Yeah.
You're not delivering physical goods
Yeah.
across international borders.
Just talked about this.
So, now I know that they do have hardware, like they do sell laptops, they sell Xboxes and all that
Yeah.
stuff. So that I don't know where they make those. So I'm assuming that maybe they make some of those overseas,
Yeah.
but a bulk of their business is, software.
Yeah.
So for a market that is worried about tariffs and a business that is mostly insulated from tariffs, it's not a bad place to be.
Mm-hmm.
Now, the only question with Microsoft and any other software company that you always have to worry about is if their customers are seeing hits on their revenue and their
Mm-hmm.
business,
Mm-hmm.
does that mean they start cutting on the money that they're spending with the Facebooks and the Microsofts and things like that? That's what you have to worry about.
Right.
So, but as long as their customers aren't spending less money, and it doesn't seem like that seems to be the issue, then I mean, again, it's not a bad place to be. So, and I know sometimes people don't think of Microsoft as a software company, but I mean, they've got a diverse business model.
Yep.
But if you look at the bulk of their business, it's a lot of, software. So,
Yeah. Yeah. Yeah.
they're very, very, very good report that they came in with. And then Meta ad revenue, right? So that's what 98% of their business. Like that's not a
Mm-hmm.
physical good,
Mm-hmm.
but it seems like their customers are still spending a lot of money. But yeah, I'm starting to see more and more companies starting to trend above their 200-day moving average. Got a couple like Tesla that are still trying to break through, but I'm looking at Broadcom just got above that. It's holding, found support there today. You've got, where's Microsoft now after this report? Microsoft not quite there yet, but
Right.
getting Microsoft's at 431. Yeah, so Microsoft is going to open above there tomorrow if this move holds. Then you got Meta, um, 578 is where it's trading at now, so it will be right at that 200 day. So it's a matter of whether it holds or not. And then you've got Nvidia, which I think is trending in that direction. So, I mean, once you start to get more and more stocks above the 200-day moving average, that to me is going to be a good omen for the market that things could potentially start to push higher if headlines or bad data doesn't all of a sudden bring things crashing down again
Right. Because we still have Apple and Amazon reporting tomorrow. So
tomorrow.
that's another two big giants that we still got
Yep.
to see the numbers. So if the reaction from that is actually good, I think we can see the market push a lot higher going into next week. So
Hmm.
again, just there's more data coming out. I mean, you get and we talked about you still got to add the employment data coming up, and trying to see those numbers and see how that's going to affect the market also. So we have a lot coming up. So yeah.
Yeah, because you've got how should I put it? You've got conflicting data on the macro level, right? Things don't look as rosy.
Mm-hmm.
And I will say this: as long as unemployment doesn't start to get crazy, I think you're in an okay place. Remember, we talked about this going into January as well, that B2B companies would possibly hold up better than B2C companies. I think that's what we're seeing, right? Because you're seeing like Microsoft is mostly a B2B company,
Right. Right.
even though they sell Xboxes to consumers and things like that, but
Right.
their Azure, their and all of their other software stuff is mostly B2B, even though there is some B2C there as well. Um, Meta, same thing. There's a mix of that. But if you look at a lot of these cybersecurity companies and these other big software companies, man, I saw Zscaler today. I didn't know Zscaler was doing that good. Okta is another one that's doing really
Octo.
good.
Yep.
Planetier is another one that's doing really good. A lot of these B2B companies are holding up pretty well. So we'll see. But I will say if we get a bad jobs number on Friday, we
Man,
we we could be hearing a different tune in the market, but we'll just have to wait and see what that number comes out to be.
I think it will be interesting because, man, I'm still like don't move because we've seen this before, right? Where we see those crazy numbers a couple of days in a row, and then come Friday, and we just completely sell off the market.
That's true.
So I don't know if this is one of those days, or maybe just like it's almost like you have to watch out for those things, right? It's like come Friday, are we gonna sell off? Are we gonna be, higher again? I mean, again, we still gotta look at those numbers that's coming up. We still gotta look at, the earnings that's coming out tomorrow to see exactly how the market's gonna react. But I just it's almost like for me, it's like if you are trading in this atmosphere, you really have to be careful. Because you just never know what direction the market is going to go at any given time.
And I was and to me, if you're not going to be sitting in front of your computer throughout the trading day, it's probably not even worth it to trade. Like for
Yeah.
me, like today, right? Once I kind of saw that drop in IWM today, I just like, all
Hmm.
right, I was out within the first hour of trading, and then I was like, you know what? I'm closing my laptop. I'll come back the back half, and then when I come back, the whole market is positive.
I mean,
So
it's just it's again, I am just shocked by the rally that we had. Like I'm trying to figure out where did that money come from, first of all. Because the dip buyers has been coming into the market like crazy. Every time we see a dip, like take Nvidia for example. I feel like every time Nvidia dips below 100, like the dip buyers come out of nowhere. If you don't
yeah.
have Nvidia in your portfolio, guys, please.
Mr. Jones says maybe we aren't where bad news is good-ish. Yeah, well, we'll see. We'll see. But I will say this though, and I think we've been saying this ever since we had the that big drop in early April, is that, this is a good time to be dollar cost averaging when it
Yep.
comes to buying stocks.
Yep.
And I've been mostly doing that more than trading. Even though today I had a pretty good trading day because of the initial drop in the market. But we did have somebody in our trading group make
Talk
$71,000.
about that. Break down that play, man, because I feel like that came straight from somebody looking at something that you posted in the group, and they just
Correct.
went with it.
So over the last month, and you can go fact check it, March 5th, we had our YouTube live where we talked about the negative GDP print based on the analysis of the Atlanta Fed. And if you go to subsequent discussions we've had since then, right? We were talking about if that number comes out negative, we could possibly see a negative reaction in the market. So I kept telling people, mark your calendars for April 30th. And I need to find the video where I use those exact words.
Yeah.
And as we got closer and closer to the date, we saw some trades, some big trades in the options market on IWM puts
Yep.
and SPY puts yesterday.
Mm-hmm.
So I posted that in a group, and that gave me some conviction that we would get a bearish move based on that number. And also being a financial advisor, I have a couple people that I tend to talk to who got their ears to the streets. And they told me, they said, everybody's expecting negative GDP tomorrow, but we just don't know how the market is going to react.
Right.
Like we
Right.
don't know. So I went in there, bought a put spread on IWM. This person in our trading group had a little bit more conviction than I did, and 71 grand in one trade. And the message that I got after that trade, he said, I think I'm done for the year.
Oh, good for you, man. Be done. That's crazy,
So,
dude. That is
so
crazy.
man, so to me, like I said, now, had he stayed a little bit longer in the trade, he probably would have gave back a lot of money
Yeah.
because I
Yeah.
had to get out of my trade within the first hour of trading. And then within the back half, we saw everything kind of move
Just
positive.
yep. Yep.
Yeah. So
But
congrats
that
to
yeah, that
that
was
trader who wants to remain anonymous, but congrats to you. Congrats to you, sir. And we had a couple people hit some really big gains.
some
I
good.
think I hit 260. I saw a lot of people hit well above 100%.
Yep. Yep.
So that
Yep.
was a
Yep.
that was a really really good trade. So
Man, I mean, for me, that just gives you. I mean, we talk a lot about um having like a core group that you can trade with. You know what I mean? Like trading is not. It's good when you trade. It's good like when you know what you're doing, but to trade with a group and have somebody else be able to see certain things that you might not be seeing and stuff and give you insight on certain
exactly.
things, it helps a lot, y'all. Like join a group, man. Don't be trading by yourself because at any given moment somebody can post something that might help you make a lot more money. You know what I mean? So just keep
Yeah.
an eye on that one.
And I know some people, I think for me, my trading style, like I actually hate day trading. Like that's not really my forte.
Hmm.
I would rather swing trade. But again, a lot of the things that I try to do is just look outside of just price action. Also got to look bigger picture as well.
Yep.
So
Yep.
there was a trade that we made a couple weeks ago on GLD because what was happening is as the long end of the yield curve was going down, gold was starting to make
Gold mid all
some
time high.
highs.
Yeah.
So gold started. So we were able to catch a good move on gold. I think that was maybe about a week or two ago
Yep.
on net.
Yep. Yep.
So sometimes the technical analysis and all that stuff that's good. Don't get me wrong, that is good, especially if you're a day trader. But sometimes looking at the bigger picture will also help you uncover opportunities outside
Facts.
of just trying to get super technical on what's going on. So if you can do both, that will help you. And for me, I like, my mantra is always quality over quantity.
Hmm.
I'd rather
Hmm.
make two or three really good trades in a week and call it quits than trying to make a bunch of day trades to get to a certain point. So, like for me, after today, I might just sit on my hands until
Yeah.
Friday.
Yeah. Absolutely. And speaking of gold, man, I mean, we've seen gold drop what 2, 3 days in a row now. So we see it like dropping a little bit more now. It's sitting in that bullish fair value gap right now. So that's also a good indicator to see what direction the market is going. Is to pay attention to gold. The higher the price of gold goes, typically that means the market is gonna go down a little bit. So
Yeah, gold is looked at as a defensive asset class. Now, I will say this. This is a report from Yahoo Finance.
mhm.
Billionaire investor John Paulson sees gold near 5,000 an ounce by 2028.
I
That
mean,
is a wild call. So
I
basically,
mean,
he's saying that gold will almost double in the next 3 years. That's a bold call. And they're saying that John Paulson is the same billionaire who predicted and profited from the housing crash of 2008. So he's got some cachet on his resume. So that's a bold call. Might be something you just might want to pay attention to and put in your back pocket. I know a lot of people that swear by gold as a long-term investor. I always have looked at it as a hedge. I'd rather be
right.
in the market rather than being in gold. Um, but we look at since what April 7th, gold has been on a tear.
Yeah, it's been
So
moving.
if the market continues to show weakness, especially with inflation, if inflation continues to be more consistent, expect gold to make another run. But as of now, it's kind of come off the high. So yeah, we'll see.
Now, the interesting thing about gold, I don't know if you guys like um know back in like the 1930s, gold was actually made illegal back in the day. It was illegal for people to own gold because during the depression, people lost faith in like the U.S. government paper, like the money, the
Mm,
hard money, the paper money. So what people start doing, they start buying gold. That they bought so much gold that the whole U.S. money supply just shrunk,
sheesh.
and
I didn't know
and
that.
and the deflation was crazy on that one. So in 1933, I believe, yeah, 1933, President Franklin D. Roosevelt made a executive order that says golds are illegal. So they actually force people to turn in their gold. If you were caught with gold, you're going to jail, right? That's crazy. Like people don't think about those things, but it's like it's literally, people start buying gold because they lost trust in the U.S. money. So, but it took almost like 40 years to make it legal again under President Gerald Ford, who signed into law in 1974 that gold is legal again to be owned. So for 40 years, you cannot own gold in the US. People don't talk about that, right? So yeah, That's that for me. That's interesting because there are people right now today that own a lot of gold.
And
People have,
I think you can buy gold bullion from Costco.
yeah, you can go to Costco and buy like a thing of gold. And
Yeah.
people, yeah, we talked about this last year. I think when we were still doing the Instagram thing, people were buying gold like crazy, stashing them in their houses and then having them in like a safe deposit box, something like that. So I just thought that was an interesting thing to talk about.
Yeah.
I know I was telling you about this new segment that I wanted to call Twitter finger because I was like, I see a lot of interesting like things on Twitter sometimes, and I was like, man, I wish we could talk about that. So one of the things I want to talk about is unusual whales. Shout out to unusual whales, man. Like if you guys ever like want to follow an account that literally gives you like when insider trading is happening, when things are happening, like unusual was really really good about that. They have an app also if you guys want to be able to download that. But they reported this a household making I thought this was interesting, a household making $199,000 a year in Massachusetts and New Jersey will still be considered middle class. If you're making almost $200,000 in Massachusetts and New Jersey, I'm not talking about California. California been in that bracket for a long time, right? If you're making over $100,000 in California, you are middle class. Anything below that, you are poor. But now you seeing those things like in the East Coast, $199,000, and you still considered middle class.
So
Even
let me give you
yeah,
let me give
give me the real deal because you live
let
there.
me give you I live in California in the Bay Area.
Yeah,
Let me give
yeah,
you a disgusting number.
yeah.
Santa Clara County. So this is where all Silicon Valley basically. Santa Clara County. A family of four making $184,000 is considered the poverty line.
God damn. I mean, you make that kind of money and you live like in Midwest somewhere in Midwest America, you are rich.
$184,000 for a family of four in Santa Clara County. You are considered at the poverty line.
Listen, I will move.
You know how ridiculous that sounds?
I will move. Like I will literally move. If you telling me I'm making $184,000 a year and I'm poor in the United States, I will move my ass somewhere. You know what I mean? I'll buy one of those what is this things called? Those campers. Buy one of those campers, bro.
Can you
That's
believe that?
no, I don't believe it. That's crazy. And people live there. People stay there. That's nuts, bro.
You're at the poverty line at 184,000 for a family of four. Let me look up another county. Let me see something. Let's
That's
see.
ridiculous. That is ridiculous. Let me see. Where are some of the people who's listening? Like, where you guys at? Because I want to know, like, where you all at? How does that considered?
Here's another county in the Bay Area. San Mateo County, a single person that's earning less than $104,000 per year is considered low income. So I know,
Are you serious,
especially on the internet, everybody's like, "Oh, six figures, six figures, six figures, six figures." Hit the
bruh?
same in every place.
Bruh, it is not the same.
It says a household of four that is below 149,000 is considered low income.
Wow,
So basically, it's saying that if you make 100, let's just say you make $145,000 in San Mateo County,
you're
you
poor.
cannot raise a family of four people.
You're just poor.
You're poor. You're. We're not talking about middle class. We're talking about the poverty line.
The poverty line.
The
That's
poverty line.
that's ridiculous.
Let me
That
look at.
is ridiculous.
Let me look at another county. That's when I keep seeing his reports about, oh, the average gas price is down to 375. Where?
Where? Not here.
Not where I live. I'm still paying well above $5. Okay. Here's another one. Marin County. A family of four is considered low income if you make less than 148,000.
Oh my God.
So I have given you three counties in the Bay Area where if you are making six figures, and depending on your family size, you are at the poverty line. And the biggest reason for that is probably because housing is so expensive. By the time you pay your rent or your mortgage, you ain't got no money left.
Mm-hmm. Mm-hmm.
Can you imagine that? Can you imagine that? Like you spend all of your life trying to get to the six-figure mark and
And
you
you finally
get
get
there.
there.
And when I'm not talking about like six figures with like 100,000, 102. I'm talking about 148, right? 148,000. You are at the poverty line if you're a family of four. That is crazy.
I mean, I don't even know what to say about that, man. Like,
Don't move to California. That's what that means. Don't move to the Bay Area.
like that just gave me a heartburn, man. It's like, oh
I mean, can you
man.
imagine that?
Because basically, if you're looking at this, $100,000 today had a purchasing power of about $74,832 back in 2024 in 2014. So maybe 10 years ago, 11 years ago. You know what I mean? Talk about 25% loss in your money's value. Talk about that. Like, let's say you had $1 today, you could have bought the same amount of stuff you buy with $1 today for 75 cents 10 years ago. I mean, that's, and I'm not talking about like, if you go like 20 years ago, you're gonna be like, our money just losing value.
The
And the
housing. Go ahead.
and I was gonna say the reason why I was like we talk a lot about the stock market is because you need to somehow hedge against this money going down. You have to hedge against this because if you put in your savings, the minute you leave your money, say every day it loses value. Every day it loses value. You know what I
Yeah.
mean? So yeah,
Yeah. A savings account is not a long-term place to park money.
no.
If you put money in a savings account over a 10-year period, you're doing what I call losing money silently.
Mm-hmm.
You don't really see it, but when you go buy something 10 years from now, you'll see it. And the
That's
thing that's
crazy, man.
crazy is that the housing inflation, especially in the Bay Area,
Mm-hmm.
it is so crazy. And a lot of it is driven because of all these tech jobs and stuff like that. Because,
Yeah.
when you start bringing in engineers who are making like 250, 300,000, $500,000, you got companies going public and then early employees are becoming millionaires overnight.
Right.
That just drives the cost of housing so high. And the supply here in the Bay Area, you're not seeing a lot of building. Like the supply is, you're
No.
not building a lot of homes.
Nope.
I
Nope.
mean, that to me is crazy. To me, to be 100% honest, there should be a law where your wages should move with CPI.
Hmm.
Just the same way that there's a cost of living adjustment for Social Security, wages should also have a cost of living adjustment. And that's why a lot of people in the Bay Area job hop because they're able to grow their income faster by job hopping.
Fast. Yep. Yep.
Like,
Bro, if
I'm,
I
I
work, if I
mean,
work, if I work remote in California, my ass is out of there. I'll make the California money and live somewhere else because that's crazy, right? But again, the other thing that we saw in 2020, you saw people with high income now that able to work remote move into areas like let's say Texas, Georgia. We see like some people move over to like Chicago and all these different places. And if you really track how people like move, you can see like housing in Texas today is completely different. Like some
oh
houses
yeah,
are going like for a crazy amount of money. Why? If you guys remember back in 2020, people who like bought properties that are moving from California to like Texas, whatever, I mean, some of these guys paid cash for those properties, like 100% cash. You know what I mean? And you can compete with somebody like that if you're trying to go into the bank, trying to file papers, trying to get a loan, closing calls, all that stuff. Because if you have cash, you don't need all that stuff. Here's a check. Let's sign the deeds over, and then we're done. You know what I mean? So that's man, that's crazy.
somebody had a question in the chat box. It says, could you review an investment strategy, yield max, options, income strategy, ETF? The basic, um, how should I put it? The basic way to define this strategy is that the investment manager is selling options against Netflix stock to generate income through the ETF. And if you ever want an analysis of a strategy or you want to dive into a investment strategy, Morningstar is a really, really good resource. So if we go to morningstar.com and we type in NFLY, that will basically give you a breakdown of what the investment strategy is for that. But this is basically just derivative income or income from selling options
Mm-hmm.
on Netflix stock. Now there is some capital appreciation with the ETF because I can see that the ETF has moved from a low of 14 on 4/7 to a high of 1885. But basically, the to me, the objective or the main objective of this fund is income. Capital
Mm-hmm.
appreciation is secondary. So if you want to look at, and this is a new ETF, so there's not a lot of data. Where do we go? Yeah. So here's the strategy. This investment seeks current income, right? The second investment objective is to seek exposure to share price of the common stock Netflix. That's what I just said. Subject to a limit on potential investment gains. Basically, what it means is that your capital appreciation is capped to a certain level. The fund will employ its investment strategy as it relates to Netflix, regardless of whether there are periods of adverse market, economic, or other conditions, and will not take temporary defensive positions during such periods. The fund is non diversified. So basically, if you look at the biggest holding in this ETF, 25.48% is the Netflix 5/16/25/905 call. So that's its biggest holding. That is where it is trying to generate most of the income to deliver to its investors. And then if you look at the rest of the holdings, it's pretty much US Treasury bills. So you're looking at
Interesting.
different, so it's just cash. So that is the investment objective of this ETF. So I
That's
know,
interesting. I didn't know you can do that actually, where you
so that's a big strategy that has taken a lot of forms in the market. There's a lot of ETFs now that sell derivative income to generate
mm,
income from the ETF. Yield Max is a very popular one that I've seen. They're pretty expensive though because the underlying fee is about 1% on the expense ratio. It's not a very big fund. It's only got 132 million in assets, but it delivers income. Now, I will say this: you have to be very mindful that the distribution income on this ETF varies tremendously. So
mm,
it varies a lot. So if you are an investor that is looking for income outside of the bond market and you're not necessarily worried about the price of the ETF, all you want is a investment that's going to generate income for you. Yield Max is not a bad place to be.
mm, mm.
So it's derivative income primary objective. So basically selling calls or puts or in this case it looks like they're selling calls. Um, but it is an income, it's a primarily an income strategy. So yeah, there's a lot of ETFs like that out there. Lots of ETFs out there like
That's
that. So
interesting.
if
Yeah.
you're looking for income nowadays, you got a couple options. Bonds is one way you can get income. Um, Dividend paying stocks, right? That's another way you can get income. The only thing with dividend paying stocks is that the income comes usually quarterly.
Yep.
And then you've got this new strategy called derivative income, which usually pays people income monthly. So YieldMax has a lot of different strategies where they will sell calls or puts or whatever it is they're doing on specific stocks. So Netflix, Nvidia, Planeteer, like they've got a ton of those. If you go to their website, you can find a lot of those different um, stocks that they sell premium on. So in times where implied volatility is high, the income is probably really high
Really.
as well.
Yep.
Yeah.
Yep. Yep.
So
That's a
hope
good
that
question
answered your
though.
question. Hope that answers your
Yeah.
question.
That's a good question. I really didn't know that there's those strategies exist out there. So that's
Oh,
definitely
yeah.
a great question.
Oh yeah. Oh yeah.
Bro, one thing, oh man, the personal income report. I didn't even pay attention to this. It came out today. It's probably something simple. Um, but it went down from 0.7% down to like 0.4%. I mean, I don't know how big this is, but something to keep an eye on.
Yeah, at least like I said, the only takeaway that I take from today's data is the market said we don't care.
We don't care. Pretty much. Pretty
We
much.
don't care.
Yeah.
I hope Damon, I hope that answers your question.
Yep. So
So, but
go ahead, go ahead.
yeah, I'm just typing in the chat.
Okay. Looking ahead, man. Tomorrow we have the initial jobless claim comes in at 8:30 a.m. The previous number was 222,000. So we'll see what this number is gonna look like coming up tomorrow. I don't see anything other than to pay attention to is we have the S&P final US manufacturing PMI also. We have the construction spending. We have auto sales also coming out tomorrow. So we'll see how those numbers looks like. And then Friday, we have the US unemployment rate. The last number was at 4.2%. So we shall see where we go from there. The other one is the factory orders. Last previous one was at 0.6%. I won't be surprised if you see this one go a lot higher
Hmm.
because of the whole tariffs thing. But
Yeah,
yeah,
everybody. From what I'm hearing, everybody has been front loading.
yep,
Everybody's been front loading because they're like, we don't know what is going to happen with this tariff stuff, so let me buy all the stuff that I need and just stock up on inventory. Now,
yep.
here's another thing you have to be mindful of as well. If you front load all your inventory, right? And let's just say you can't get rid of it.
You have to discount that shit.
You got another problem on your hands.
You have to discount now.
So you that is something to keep in mind. There's it could be a catch 22, right? You front load
Mm-hmm.
all your inventory for Q1, you don't spend any money in Q2, and let's say Q3, Q4, you ain't got no buyers.
Yep.
You've got a problem.
Yep. You got a big problem.
You got a big problem. So keep that in the back of your mind, and we'll have to revisit that. We'll have to revisit that
Yeah.
later on this year to see if companies may not be able to get rid of their inventory.
Business decisions, man.
Business
Business
decisions.
decisions. Yeah.
And as long as you don't have any sort of clarity on the tariff policy, it's a crapshoot.
Yep. Pretty much.
So
But yeah, man, as we wrap up, bro, like what is one of the things? Oh, one thing I'll say is the stock market is a great place for you to turn a little bit of money into a lot, but you could also turn a lot of money into a little. So just be careful. You got to make sure you understand exactly how it works and all this stuff.
yeah,
But it's
as a trader in a volatile market, your biggest asset is risk management.
mhm.
And me personally, in volatile markets, I like to trade less. I don't because to me, I almost feel like sometimes the more you trade, the higher the potential for you to revert back to the mean.
Yep, yep.
So if you can make one or two quality trades a week and be patient,
Hmm.
to me, that's kind of like better than trying to trade a million, five, six, seven times a day and trying to hope that you catch, a good move.
Yep,
I mean, again, we had a member today make $71,000 and he told me he's done for the year.
yeah, yeah.
So
I mean, that's an amazing move right there.
yeah, that's an amazing move. I wish it was
But
me
it
though.
come, but it comes with patience though. Like
Comes with
it
patience. It
really
comes
comes
with
with
patience.
patience. You know what I
Yeah,
mean?
it comes with patience. Yeah,
Yep.
because the last time I spoke to this person, he said that he probably trades because of his schedule, maybe two or three times a week max.
Hmm. Hmm.
So, he said yesterday was a day where he was able to, you know, kind of sit down and look at, okay, this is what I want to do to swing into tomorrow. And then
Yep.
next day, you get out of your trade. This is how I like to trade. You buy something overnight, it makes the move you make overnight. You
And then you're
get out
done. And then
and you
you're
go to
done.
work and you're
Yep.
done for the day.
Yep.
Those are the best trades.
Yep.
Obviously, it doesn't always happen like that, but that's what I like to look for.
Yep. But the most interesting thing that you said right now is like somebody can take 10 trades to hit that $70,000.
Yeah.
Well, somebody can do one trade with patience to hit that $70,000. You know what I mean? So it's like it all depends on how what your strategy is. If you're a person who like um like trading and enjoys being out there in the market watching the stock market and stuff, it might take you multiple trades to get to the $70,000 because you have to kind of pay attention to a lot of things. You might be doing some short term things. Some days you might be losing some money, kind of like Wale said. You might go back down to the number you started with. You might even go below the number you started with. So
Mm-hmm.
it all depends on your strategy and what you're looking for. But any last minute words, man, before we wrap up for the night? I know you give a lot of good advice. I know we have a lot of stuff coming up tomorrow. Remember, we have Amazon and Apple reporting tomorrow, so just keep an eye on those.
Yeah, the one thing I'll be thinking about is how what does what does Amazon say about tariffs and what does Apple say about tariffs? Because we saw that the White
Yeah.
House had beef with Amazon.
Yep. Like that was a
So
quick beef.
Amazon said, okay, what we're gonna do is we're gonna start putting
Tariff.
the tariff price, the additional price you have to pay based on tariffs on some of our products.
Yeah.
And then the White House came out and was like, yeah, this is a political,
Yeah.
ploy that Amazon is doing. And they said Trump called Bezos, and then Amazon was like, well, we weren't really going to do that and all that. So
But that tells you what companies are doing with this tariff situation. They are passing the cost down to you. And sometimes they might already be passing the cost down to you. Remember, because some of those tariffs haven't hit yet. They might be just passing the cost down to us anyway.
oh man.
In anticipation that tariff's gonna hit, so they don't have to like adjust any things. They might already start doing it. Like some of the things might already be expensive, even though tariff hasn't hit yet. So
I will challenge people. Just as you buy your day-to-day goods, keep track of how much you spent on certain things
yep.
and seeing if those numbers have gone up.
Oh yeah.
Um, because one product that's gone up that I know specifically, personally, is my chicken wings that I buy from Costco.
Yep.
That has gone up. That has gone up. And I'm not happy about that.
Oh man.
I'm not happy about that.
But we don't export chicken though, so I don't know what the hell.
I don't. Well, I know a lot of it had to do with that, with the bird flu that happened. So the supply
Yeah.
of chickens went down.
But the
Now I will.
problem, but the
Go ahead.
problem is when the price goes up and you still pay for it, you're not incentivized the company to put it down. Like, oh, you're gonna pay for it.
Shit,
So
I'm gonna buy my chicken. I don't care. Now I will say this. I will say this. I keep hearing. I have a friend that's a big conspiracy theorist.
Mhm.
He's saying that the port of LA, the traffic is down tremendously.
Yep. I'm hearing that too from a lot of
And I'm
truckers.
also hearing that the number of ships leaving China to export products has gone down.
Yep.
Everybody is saying in May, in June, we're going to start seeing empty shelves like we
Yep.
saw in COVID.
Yep.
I don't know if that's going to happen. I don't know if that is going to be true, but something I'm going to keep an eye on because I haven't seen it yet.
Yep. Yep.
But I'm hearing that we're going to start seeing empty shelves in May and June because of the traffic from imports from China
It's down.
is down.
Yeah. Yeah.
So we'll
Yeah.
see.
I will not have any positive news about that until well, not even positive, but until I hear that Trump and Xi actually got on the phone and talked to each other. Yeah, I don't think this is. I think we're in a deep problem. We're in deep trouble when it comes to like imports and exports. So yeah, we're about to learn. We're about to learn the hard way. Honestly, we're about to learn the hard way. Unfortunately, but yeah.
If there's one takeaway, I'll say is that we see that you cannot bully China. I mean, that's just what it boils down to. Can't
Yeah.
bully China.
Yeah.
So
Anyways, man, so let's wrap up. Thank you all for being here. For those of you who are watching with us, we will be back on Friday to see how the market close. And I am 90% sure that we're gonna sell off on Friday, but we shall see.
depends on how the market reacts to that job number.
Yeah, we
Now,
shall see.
this is what I'll say. Remember, what was it July 5th last year? We saw that uptick in unemployment where we saw that big sell off.
Yep,
Will that happen again on Friday?
we shall see.
We'll see.
Yeah, we shall see. If you guys want like a really good something you guys can do, like literally see real numbers in real time, go on LinkedIn in the job section and just click apply on any of the jobs that's posted and see the number of people applied for the jobs. You're gonna see like more than 100 people applying for one position. That's how you know people are desperate out there. You know what I mean? So go look into that. I think that's gonna help you kind of understand like the job market right now. It is not pretty. So yeah. All right, y'all. Well, let's wrap up. You guys have a good night. We will talk again on Friday. And as usual, we appreciate you guys being here. And yeah, we'll talk to you all on Friday.
Subscribe, share,
Oh, please,
tell your mama,
yes.
tell
Tell
your
tell
best
tell
friend.
everybody.
There's a lot of good information you'll find on this YouTube channel. So
Yep.
our goal is to always provide quality, good information that you can act on. So
Yeah. So please subscribe, share, downloads, whatever you need to do. Just link up with us and share with people, man, because we definitely trying to just help people and add value. So with that being said, we will see you all on Friday.
see you Friday.
All right. Peace.